Good morning. Welcome to Ainsley News. It's end of week. Welcome to Friday, everyone. Today we're talking silver production yields tumble. This week was notable for the Fed committing to continue printing USD hand over fist and keeping rates at zero to promote borrowing hand over fist, with borrowing-seeking banks creating even more money supply again through fractional reserve expansion. At home, the RBA is doing the same. It's therefore a very real stark contrast to look at the new supply of a real monetary asset in comparison. The 2020 results are out, and the following chart shows total silver production, blue bars in millions of troy ounces, from the world's top 7 primary silver producers and the amount of raw ore processed to get it. They're the red lines in millions of tonnes. It should be no surprise amid COVID-related closures that both dropped in 2020. That this coincided with surging demand, no doubt, contributed to the silver price rising as much as 40% last year and finishing up 35%. Here's that chart here. However, more importantly, and not immediately apparent in the previously shown chart, is the yield. If we look at the first year in 2005, it took processing 9.4 million tonne of raw ore to get 123 million ounces of silver, a yield of 13 ounces per tonne. At peak production in 2019 of 23.2 million tonne, the supply of new silver only yielded 140 million ounces, or a yield ratio of 6, half of that in 2005. In other words, they had to process twice the amount of ore to get the same amount of silver. Here's a chart here showing that average yield and how we're gradually getting less out of the ground. The authors of those charts put that into perspective. In just 15 years, these top silver producers' average yield fell from 13 ounces per tonne to 5.8 ounces per tonne. Thus, the total processed ore increased by 10.8 million tonnes, while production increased by 5 million ounces. Typical underground haul trucks can move 20 to 65 megatons of ore in one load. If we assume an average of 40 metric tonnes of ore per haul truckload, that would be an additional 270,000 loads to produce the same or even less silver. With more than 250,000 truckloads of ore to produce the same amount of silver, no wonder the cost to produce silver is going up. By contrast, more fiat money is created by keystroke, by the Fed. We colloquially call it printing money, and the meme catchphrase, printers go brr, perpetuates that image. However, little as laborious as actually printing notes happens. It's all digital and has absolutely no intrinsic value born of real cost and real lack of supply. Whilst much of that has been written about this year, about the real price discovery of silver amid the future actions by the bullion banks, at some stage reality has to hit, and the true price discovery driven by supply and demand will prevail. That data we've just shown winds that silver coil spring all the more tighter. Well, that's news for today, everyone. We hope you've enjoyed your week. Everyone enjoy their weekend. AinsleyBullion.com.au for all things physical, AinsleyWealth.com.au for all things cryptocurrency, and GoldSilverStandard.com for our own cryptocurrency built and backed by real physical gold and silver. We'll catch you Monday for more news.